U.S. tariffs on copper imports could be coming within weeks, according to reporting from Bloomberg. Copper traded in New York surged to a record. On the report, President Trump previously ordered an investigation into potential tariffs on the metal to be resolved within 270 days. It now appears the report may be coming much sooner. Joining us to discuss, Fernando Valle, Hedgeye energy analyst. Fernando, thank you so much for joining us here. I want to pull up a chart if we can, just taking a look at copper prices stateside, hitting a record here, outperforming copper prices on the London Metal Exchange. I wonder where you see New York copper prices going, particularly given just the shift that we've seen in metals prices and kind of the impact of tariff prices on precious metals like copper.
Well, we've been bullish on copper despite what we define as a quad four environment in the U.S., which is essentially what we're having inflation accelerating and just lower growth. So the reason for that is exactly what you mentioned. Is we think copper will follow a similar trend to what steel has done, which is ramp on the back of tariffs. The big issue that we see is that on our trading ranges is getting close to the top of the range, and so there might be some limited room here to grow. We think that that's already a little bit front run as it goes. But the one thing that I'll caveat that is we're expecting to see a large stimuli from Europe and China specifically, which has been the largest buyer of copper, and that could be a significant impact, positive impact, even after the tariffs.
So to what extent do you think we're nearing a top with copper, given the multitude of factors that you just laid out?
So in the near term, it's at the top of our range, so we think we're coming close to that near term peak.
Got it. And I wonder how you're thinking about just the shift in metals prices overall and how big an impact that could have on the prices of other, goods that obviously these metals are put into in the United States in particular. How should we be thinking about the impact that this lift in copper prices could be having just on everyday products?
So the near term, the biggest copper goes primarily into the construction side in the U.S. We are already seeing it. We've seen a slowdown there on the overall construction. So we aren't expecting to see again a huge impact near term. The biggest factor for us has been the slowdown from the economy itself. Obviously, you've had deflationary measures with Doge and others cutting some of that consumption. So when it comes into April, we expect to see a little bit more of an acceleration where we get incrementally more positive. But in the near term, we've seen more. We've been very bearish on U.S. consumption. We've actually seen capital flows going outside the U.S., as I mentioned, to Europe and Asia, where you're getting more stimuli and potentially recovery from what has been a very dire previous period.
Fernando, with the strength in China and the pivot for them to increase their economic growth, they're putting lots of orders in and buying lots of copper. They're one of the biggest importers of copper in the world. But with supply imbalances the way they are right now, are they willing to pay these high dollar prices for copper just to keep their economy going? And if their supply imbalances continue, we could see lower prices for copper down the road. This is what you're pointing towards as far as a peak in prices for copper?
Yeah, and more in the near term has been the U.S. demand side being weaker because, as we said, that quad four is biting right now. As you mentioned, China, I think the stimuli is because their economy is struggling, and so they are going to try to increase demand. Is the same thing that we've said on the natural gas side, with the caveat that natural gas has already been strong because of the inclement weather in the northern hemisphere over the winter. We think there is going to be an increase in demand because Europe and China are stimulating their economies, whereas the U.S. has been trying to contract or at least trying to reduce some of the deficit with, again, acts like Doge and others trying to curtail some demand, and then just the effect of prices itself. Going into April, we see an acceleration in overall demand, and that could be positive for copper.
I want to switch gears a bit, Fernando, and talk to you about oil. Obviously, a lot of headlines impacting oil right now, but I specifically want to talk to you about this idea that we may be moving towards a ceasefire between Russia and Ukraine. I first of all wonder if you buy that idea that we are moving towards a ceasefire, but also to what extent you think the end of this war could impact oil prices, if at all, just given the fact that we do know that China and India have been purchasing oil from Russia this whole time.
Yeah, as you said, there's very limited impact on the overall supply of crude. In fact, crude itself could decrease because one of the areas that Ukraine has attacked in the near term has been refineries and other infrastructure within Russia. So there may be fewer crude exports and more refined product exports from Russia if there is a ceasefire. As far as the likelihood of a ceasefire, I'm an oil guy, and my geopolitics are not as strong. But I take everything with a grain of salt. Covering energy for 15 years, you've seen that governments come and go on their promises. I think the overall impact on the oil side, again, the stimuli in these economies would be a much bigger driver than the supply chain, because, again, as you said, that oil is already getting to the market. If anything, it helps reduce some of the differential prices between Russian crude and others, increases the competition. So it could be bad, for example, for WTI versus Brent, but not necessarily for the overall Brent price.
Well, we always appreciate your geopolitical takes, Fernando. Thank you so much for joining us this morning. Appreciate it.
Thank you.